Hello everyone, welcome back to Stock Market Meridian. Today is 22nd July 2026 and you're watching today's pre-market report. Let's begin with the global markets. Starting with the US markets, all the major indices closed in positive territory. Coming to the European markets, the major indices also ended the session on the positive side. Now looking at the Asian markets, Japan, China and South Korea are currently trading in positive territory. So overall, global markets are indicating positive sentiment for today's session. However, despite this positive global setup, there is one major risk that Indian markets need to watch carefully today, and that is rising crude oil prices. US WTI crude oil is currently trading around $83 to $85 per barrel, while Brent crude is trading near $87 to $88 per barrel. Brent crude is now moving very close to the important $90 per barrel level. This sharp increase in crude oil prices remains one of the biggest risk factors for the Indian market today. And yesterday, Indian crude oil futures closed with gains of approximately 2%, while natural gas futures ended around 0.25% higher. Now coming to precious metals. Yesterday, Indian gold futures closed approximately 1% higher, while international gold futures are currently trading in a neutral to positive zone, and Indian silver futures closed with strong gains of approximately 2.5%, while international silver futures are currently trading in a relatively neutral zone.
Now let's check ADR data. Yesterday, on the negative side, Infosys, Reliance Industries and Wipro ADRs closed weak. On the positive side, ICICI Bank, HDFC Bank and Dr. Reddy's Laboratories ADRs closed with strong momentum. So the ADR trend was mixed, with banking ADRs showing relatively stronger performance. Now moving to the FII and DII data. Yesterday, FIIs were net buyers of approximately 1650 crore rupees, while DIIs were net sellers of around 656 crore rupees. The important point here is that after nearly a week, FIIs have finally returned to the buying side. This could indicate an improvement in foreign investor sentiment toward the Indian market. However, we need to see whether this buying continues over the next few trading sessions. Now let's check the economic calendar. Yesterday, there were no major economic events to track, but today we have two important data points to watch: UK CPI inflation data and US crude oil inventories data. The US crude inventory data will be particularly important considering the ongoing volatility in global crude oil prices. Moving to tomorrow, the European Central Bank's interest rate decision will be announced, along with the ECB deposit facility rate. And from the United States, we will also get the latest initial jobless claims data. So these economic events could influence global market sentiment over the next couple of sessions.
Now coming to the major geopolitical updates. President Donald Trump stated that the United States has no interest in diplomatic negotiations with Tehran until Iran is ready to engage in what he described as a meaningful way. At the same time, Trump issued another serious warning. He said US forces could hit Iran's Pickaxe Mountain complex pretty soon and very heavily. Pickaxe Mountain reportedly contains two deeply buried tunnel complexes linked to Iran's nuclear program. The facility is believed to be extremely heavily fortified, making any potential military operation against the site highly significant. But while Washington considers its next moves, fighting around one of the world's most important oil transportation routes continues to intensify. Iran attacked a tanker in the Strait of Hormuz early on Tuesday, forcing the crew to abandon the vessel. In response, the United States carried out its 10th consecutive night of airstrikes against Iranian positions as part of efforts to weaken Tehran's control over the waterway. However, despite these continuous strikes, Iran continues to disrupt shipping traffic through the Strait of Hormuz.
And higher crude oil prices would remain an important risk factor for the Indian equity markets. Now coming to another very important update from President Trump. According to Trump's announcement on Truth Social, a proposed new trade policy targeting generic pharmaceutical imports into the United States is scheduled to take effect from August 1st, 2026. Under the proposed policy, imported generic medicines will continue to face a 0% tariff for the first 2 years. This 2-year grace period is intended to give pharmaceutical companies enough time to establish manufacturing facilities within the United States. But after those 2 years, the situation changes significantly. Companies that fail to shift their manufacturing operations to the United States could face a 100% tariff for 1 year.
And following that 1-year period, the tariff on imported generic medicines could increase further to as much as 200%. The objective behind this policy is very clear. The US wants to bring generic pharmaceutical manufacturing back onto American soil and reduce its dependence on overseas manufacturing facilities. But if tariffs of this magnitude are imposed, ultimately American consumers could also face the impact through potentially higher medicine costs.
However, there is one important clarification. The proposed trade policy for patented, branded, and innovative medicines remains unchanged. Therefore, this development will be particularly important to monitor for Indian pharmaceutical companies with significant exposure to the US generic drug market. Now, let's move to today's important company-specific updates. First, we have JSW Energy. JSW Energy has finalized its secondary share purchase from Toshiba Corporation Japan Limited. The company completed the acquisition of additional equity shares for a total cash consideration of approximately 150 crore rupees. Following this transaction, JSW Energy's stake in Toshiba JSW Power Systems or TJPS has increased significantly. On a non-diluted basis, its stake increased from 4.6% to 20.7%, and on a fully diluted basis, the stake increased from 2.4% to 10.7%. TJPS is a joint venture between JSW Energy, Toshiba Corporation and JSW Steel. The company operates a state-of-the-art manufacturing facility in Chennai capable of producing supercritical and ultra-supercritical steam turbine generators of up to 1000 megawatts. Strategically, this acquisition strengthens JSW Energy's access to critical power generation equipment and could improve its supply chain resilience as the company moves forward with its thermal power expansion plans. And interestingly, JSW Energy has already placed orders for approximately 1,600 megawatts of ultra-supercritical turbine generators with TJPS. So this is an important strategic development to watch in JSW Energy. Next, we have a major corporate development from Anant Raj Limited. The board of directors has approved a composite scheme of arrangement under NCLT provisions. The objective is to create two separately focused listed businesses. Under the proposed structure, Anant Raj Limited will continue focusing on its core real estate and infrastructure development businesses. This includes residential townships, luxury housing, commercial developments, and hospitality projects. Meanwhile, Ashok Cloud Private Limited will be carved out and independently listed as a dedicated digital infrastructure company. Ashok Cloud will primarily focus on data centers, co-location services, sovereign public cloud, and AI-ready cloud infrastructure. Now coming to the most important point for existing shareholders. The proposed demerger comes with a 1:1 share entitlement ratio. Eligible Anant Raj shareholders will receive one fully paid-up Ashok Cloud equity share with a face value of 2 rupees for every one Anant Raj equity share of face value 2 rupees they hold. Importantly, the scheme will not cancel Anant Raj's existing equity holding in Ashok Cloud. Therefore, Ashok Cloud is expected to continue as a subsidiary of Anant Raj while also having its own independent stock market listing. According to the management, the two businesses have very different capital requirements and operating models. Separating them could provide sharper management focus, improve operational flexibility, and potentially unlock the market value of the company's data center and AI cloud infrastructure business. However, investors should remember that the proposed demerger is still subject to the required statutory, regulatory, shareholder, and NCLT approvals. So Anant Raj could remain an important stock to watch. Now coming to the results section. Several companies have announced their quarterly numbers. Let's quickly understand how they performed. First, we have JSW Infrastructure. The company's revenue increased on both a year-on-year and quarter-on-quarter basis. EBITDA improved year-on-year but declined sequentially on a quarter-on-quarter basis. However, net profit and profit margins declined sharply on both a year-on-year and quarter-on-quarter basis. So despite the improvement in revenue, profitability remained under pressure. Overall, JSW Infrastructure reported a disappointing set of numbers. Next, we have Indian Hotels. The company's revenue, EBITDA, net profit and margins all improved on a year-on-year basis. However, on a quarter-on-quarter basis, the numbers declined sharply. But there is an important factor investors should understand here. The hotel industry generally experiences stronger business during the third and fourth quarters, while sequential weakness can be seen due to seasonal factors. Therefore, excluding this seasonal QOQ impact, the company's year-on-year performance remains healthy. Overall, Indian Hotels reported a good set of results on a year-on-year basis, despite seasonal sequential weakness. Next, we have TVS Holdings. The company reported a strong set of numbers. Revenue, EBITDA, net profit and margins all improved on both a year-on-year and quarter-on-quarter basis. This indicates healthy underlying business momentum. Overall, TVS Holdings delivered a solid set of quarterly results. Next, we have Mahindra Finance. The company's revenue increased on both a year-on-year and quarter-on-quarter basis. Net profit increased strongly year-on-year but declined sequentially on a quarter-on-quarter basis. A similar trend was visible in the company's net profit margin. Coming to asset quality, both gross NPA and net NPA improved on a year-on-year basis, but increased compared with the previous quarter. So there is some sequential weakness, but the year-on-year performance remains strong. Overall, Mahindra Finance reported an okay set of numbers. Relatively weak on a quarter-on-quarter basis, but significantly stronger on a year-on-year basis. Next, we have Bandhan Bank. The bank's revenue increased slightly on both a year-on-year and quarter-on-quarter basis. At the same time, net interest income showed strong growth. However, net interest margin remained almost flat quarter-on-quarter and declined on a year-on-year basis. On the positive side, asset quality showed improvement. Both gross NPA and net NPA declined on a year-on-year as well as quarter-on-quarter basis. Overall, Bandhan Bank's numbers look relatively balanced, neither extremely positive nor significantly negative.
But compared with some of the weaker banking results we've seen during this earnings season, these numbers appear relatively better. Finally, we have Bharat Coking Coal, a subsidiary of Coal India. The company reported a weak set of quarterly numbers. Revenue showed strong improvement on a quarter-on-quarter basis but declined sharply compared with the same period last year. EBITDA showed improvement, but the biggest concern was profitability. Net profit and net profit margins declined heavily on both a year-on-year and quarter-on-quarter basis. Therefore, despite improvement in some operating parameters, the significant pressure on profitability remains a major concern. Overall, Bharat Coking Coal reported a weak set of results. Now, on your screen you can see the list of companies scheduled to announce their quarterly results today. These stocks are expected to remain in focus throughout today's trading session. So keep these companies on your watch list, particularly during the second half of today's market session. That's all for today's pre-market report. If you found this video helpful, don't forget to like, share and subscribe to Stock Market Meridian. And I'll see you again this evening with today's post-market report. Thank you for watching. Signing off. Bye-bye. Jai Hind.